Well, look, I think that the opportunities are there in the markets. I think when there's a lot of panic, opportunities present themselves, and I think it's fair to say that you can find them in some places, specifically like the emerging markets. There are a lot of undervalued currencies, and the baby is getting thrown out with the bathwater here, as the proverbial statement goes. So you can find some value. Actually, when I was on last with you guys, I recommended Brazil, and Brazil has done very well since then. Over the past 2 months, we've seen a double-digit return. So I do think that when you see maximum or a panic, then you can find gems in the markets.
All right, Ryan, are you? I don't think you're quite as sanguine. Is that true, or how are you feeling at this point? I mean, this is a pretty serious correction that's dragged on longer than people thought, I think.
No, you're right, Joe. There are definitely concerns, but building on what Kathryn said, we still see more positives and negatives. Let's take a look at volatility for a second. We only had 8 1% moves up or down last year, 2017. This year, assuming we have one again, the next one will be the 50th 1% move up or down this year. So that actually is more historically normal. Volatility is normal late in the cycle. Now, Joe, I brought one for you here today. I think you'll like this. We took a look at midterm years on the closing low for the S&P 500. We now know that was October 29th. The good news, every single year back to World War II, from the closing low of October to the end of the year, the S&P was higher every single time, 18 out of 18 times. Now, some of those gains weren't a lot. Some of them were pretty impressive. We think the calendar is probably a bull's best friend here. At the same time, those October 29th lows, we think there's a very good chance those are probably the lows for the year. Might go down and closely retest them. You do see double bottoms at W formation. Overall, though, we think that was a major low, and really the rest of this year should be positive for the bulls, we think.
What do you think the market is? What do you think the market is really at this point keying on, Ryan? I mean, if you had to look at one thing, is it oil? Is it the dollar? I'm going to bring up, when I can, a 2-year Apple chart. I mean, the FANG stocks and technology led for so long, and I mean, we're talking about very big, very large market caps and all the leaders. And there's a 2-year Apple chart, and this is what I was looking at earlier. If you were to draw a line, I'm not a technician, but if you were to draw a line, that almost looks at a point where it wouldn't look so asymptotic on the right-hand side of that chart. What are you following, Ryan, as far as what we should be able to, when we can make some determination about whether this correction is over?
Sure. Well, you mentioned, growth stocks and the FANG stocks. Growth versus value. Historically, value does a little bit better when you have a stronger economy. So we think that's a place that people can finally find, quote unquote, some value. But, what makes the bottom? Well, that's obviously a lot of people give a different answer. But again, we think those October 29th lows were solid. If we continue to see some improvement on the overall advanced decline lines, have been weakening, but overall participation is still there in our opinion. And let's talk earnings just for a second, Joe. What cover the journal today, concerns over global growth. Believe me, those are the things keeping us up at night. But we're looking at 15% EM growth, emerging markets next year, earnings growth year over year, and 10% here in the U.S. And 20% this year. So earnings growth globally are still really strong. Yes, things are volatile, but earnings drive long-term stock gains. And overall in the globe, we still see strong earnings this year and into next year. So we'd still be a buyer of these volatilities and these dips.
Kathryn, you think it has to do with what happens between the leaders of the United States and China, Donald Trump and Xi? You think that is as important as anything?
Yeah.
Really?
Yeah, I think, look, we have to face facts here. This is sentiment driven. As your other guests mentioned, we have very solid earnings growth, right? We have economic growth that's still very strong in the United States. So I think that once sentiment shifts, I think we need a driver to get there. And that driver to get there could be, I'm not saying it's going to happen, but if in fact we do get even a verbal agreement, if we get an agreement to allow joint ventures between U.S. and Chinese firms in China, or an opening of the Chinese market to U.S. car imports, or if it's even allowed to have a crackdown on IP theft in a real way, any one of those 3 things I think will send the market flying. So that's why I think it's a good time to get in now in the fourth quarter in certain U.S. sectors and in the emerging market space, positioning for outperformance in 2019.
So you even go not just to China, you look at some emerging markets as well, Argentina, Brazil. I'm looking at your notes. There's a lot of things that are on your radar. What do we need to watch there?
Yeah, so Brazil definitely is going to position for a strong 2019. This has been a country that's been really battered over 2018 and has recently had a presidential election. in which the market-friendly candidate did in fact win. Whereas on the other hand, you have Mexico, where you have the unmarket-friendly candidate who won the presidential election. There's a divergence. I think this divergence will favor the biggest heavyweight in the region, Brazil, for 2019. Combined with low interest rates, it's ripe for outperformance. In the broader emerging market space, China has been beaten up really savagely. The biggest risk, to my view, is clearly that, as Becky mentioned earlier in your program, that we do get that jump from tariffs from 10 to 25%, which is on the docket, right? It's January 1st. We're getting that. The threat is that the remaining 50% of shipments from China to the U.S. are also hammered with tariffs. That's really the worst case scenario, and that's what's keeping me up at night. So they do need to get to some agreement. I think that the agreement with NAFTA, with the renegotiation of NAFTA, gives us good precedent, and I think that there is ground for some agreement with regard to China and to avoid an escalation of the trade tensions.
Yeah, I feel that the way it looks to me, Trump knows what the market's doing. She knows what China's doing. They're going to agree to have some type of, who knows if anything really happens, but they'll.
Look, at the very least, hopefully they agree to not raise tariffs to 25% or put those tariffs on the additional
or even the 75% Mohammed Al-Arian probability, where they just kind of, change a couple of things at the margin. Nothing really changed. They both claim victory. Right. They both get considered.
The market will take it.
Great it's a win-win for both countries.
The market will take it, but the question is, will Trump accept that?
Because I don't know if Trump's playing for the market on this one.
I think incentives are in line for Trump to take it.
What'd you say?
I'd say incentives are in line for Trump to take it. I mean, midterms elections are passed. There's not that short-term political, incentive to really keep hammering China. I think the rally in stocks is a badge of honor for the president. The economic growth is as well, and I think that at the very least, his economic advisors are telling him that if you do in fact jack up tariffs from 10 to 25%, and then put tariffs on the remaining. So 100% of shipments from China to the U.S., then that will cause inflation, which will cause Jay Powell to hike rates, which is a vicious cycle, which will impact economic growth. So I think the incentives are aligned to get to an agreement on both sides.
What, Ryan, you got any comment? I mean, I don't know. You're looking at small caps. Are you thinking about what Trump and Xi, how they approach each other, or is that, yeah? What do you think? Just quickly.
No, yeah, absolutely. Here at LPL Research, we do think that G20 later this month, there's a good chance of some resolution there. But let's not forget, next year is obviously pre-election year. You look for, again,
we got an election coming up. I keep saying
exactly. Usually markets do quite well from the midterm election 12 months out because, again, you're trying to get the economy going, get some good news out there, and stocks historically do well. So does the economy, as obviously everyone's trying to get reelected. So we think that, again, could play out in 2019, the upward move in equities based on that feature right there.
I mean, are you supposed to, if they're still counting votes in Florida, are you allowed to talk about the next election? And maybe we should wait, Georgia.
Let's wait.
You want to wait?
It may be premature.
All right.